So understanding how the CWAP and VWAP interact with the profile and the standard deviations is the first key element to trading a trend following strategy. We're going to build some algos that make all of this very, very simple to do. And I'll show you those in just a moment. Before we start building algos, though, I want you to understand the process that you need to use in order to determine when there is a trend opportunity. First and foremost, obviously, we have on the chart right now, we have what looks to be a decline turning into a move higher. So if we go back, we can see that there was a decline here. So let's bring this back across and profile from the high here. And we can see that at some point, we've crossed the volume weighted average price. So you can see here we held against the VWAP, here's the VWAP being touched, and here we're trading through the volume weighted average price. This invalidates the downtrend. We've now started trading with buyers trading above the average of all of the volume. It invalidates the downtrend. So we can start looking for a move higher or an uptrend in this case. So trading through the VWAP invalidates a trend move in one direction and indicates that we might want to start looking in the other direction. That's one step. The other step is to just learn how to read the chart, and OFA is going to help you tremendously in doing that. We can see here that we have what it begins to be consolidation. We're making lows. We're making another low that's equal to, even a little bit higher than the prior low. We're making what looks to be a small range here. The market dips down and makes a little bit lower low and then trades back up and holds against that same high. There's a bit of a range here. And for us to be able to recognize that the market is no longer just trending straight down, we can start to see things like, well, here we're breaking up and we're beginning to move up the other direction. So when we see the market making higher highs and higher lows as opposed to lower lows and lower highs, we know that there's potentially an opportunity for a trend trade. It's very key in these examples that we're going to be giving you in this training series that you absorb that piece of the information. Every trade will be explained as to why it looks like a trend opportunity, or in any of the other trading styles that we're going to show you, you have to understand the setup process. One of the problems that we see with novice retail traders is that they assume that every single move in the market is a trend. So if every move in the market is a trend, I'm going to use a CWAP and a VWAP on every single move. And instead, we want to be focused on key turning points in the market, key levels of support or resistance that have been traded through. And if we take that approach, we're going to be looking for trades that make a little bit more sense, like in this case, the volume weighted average price being broken and traded through tells us that perhaps we should be looking in the other direction. We start seeing higher lows and higher highs. So we want to try to capture this as a trend-based trade and find those opportunities where we're crossing the CWAP and not crossing the VWAP. The great thing about the CWAP and VWAP trade is that you'll notice that there's usually multiple opportunities. So even if you don't recognize that there's a trend here, we have the opportunity to capture it higher, not once, but twice. In this case, we also have another opportunity up here, but as I said, the risk to reward gets a little bit upside down. In trend-based trades, you're also going to have opportunities like this one where you can clearly see prior highs that we might be trading into as a target. And then we'll also have opportunities where we're making new highs or making new lows in a downtrend, where we don't necessarily see anything in front of us that we might want to use as a target. In this case, it would make sense that we have a high here that came in at the London Open and made a major transition and started a downtrend. It might make sense that we want to look at this as a potential target for our trade and you can see we traded right up to the point of control. We're going to learn more about pivots and how to trade off of what we call decision points in other lessons. But for now, let's start looking at some trend-based trades, see how we capture the pullback of the trend with the CWAP and VWAP. To prepare for these trades, we're going to need to build at least one algo that will help us get into trades like this. So let's pull this back and let's think about the potential entry. In fact, let's use one further up the chain here so that there's no confusion as to whether or not we would be able to recognize the uptrend. This might be a little bit early for some of you. We know that we want to trade from the CWAP. So that is going to be what we're building the algo around. The algos all have three different pieces: the execution, profit, and management. But we have to send a trade somewhere, and that's what this little drop down is for. So we know we're going to be sending the trade to the CWAP. Now we can either send it directly to that price, in this case 67.70, or we can offset that by using this little box. Some of you will want to lead the CWAP by a couple of ticks so that you know that you're going to get filled. In some other markets, it may be that we always trade through the CWAP, so it makes sense to either be directly on it or even a little bit behind it to reduce your risk. Now that's a very important factor, and I want to use this here as an example of that. Let's zoom in on this particular interaction between the CWAP and the VWAP. For the sake of simplicity, I'm going to remove the standard deviation lines from this chart. There's just too many little lines, and I don't want the video to be too messy for you. All right, so we see that the CWAP intersection is here at 68.80. If we were to take this trade and have a stop behind the volume weighted average price, we would be looking at a minimum of a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 tick stop. That means just to make 2 to 1 on our risk, we would have to go 32 ticks up. That's a large expansion to not take any profit before then. And my recommendation is that you're always looking to make at least 2 to 1 on your trades, or else this will be a losing battle for you overall as a retail trader. When we have a situation like this, we have to make a decision. We can either take the trade and accept the risk, or recognize that the risk is too large for us and adjust the entry to make the risk less. We're never going to adjust the stop. It does not make sense if we know that the VWAP is the point at which the trend will be invalidated. It does not make sense to have our stop inside of that range between the CWAP and the VWAP. We can't go long here with a stop here. In this particular instance, it would have worked out. But if the market traced back to the VWAP and bounced off the VWAP and you were taken out of the trade, it would be a very foolish endeavor. It will always make more sense for you to adjust your entry down and potentially miss the trade than it will be to risk additional capital in a bad trade opportunity. So if I determine that the most I can afford to risk is 6 ticks, then I need to adjust my entry such that I have a 6-tick stop from where the VWAP falls, not from the entry. So I would have a 1, 2, 3, 4, 5, 6-tick stop, which puts me at 68.30, which means that I cannot send an order to the CWAP. I need to send it to the CWAP minus the spread. So it's okay for you to adjust the entries by changing the offset either negatively or positively to get behind or in front of the trade variable. So let's take a look at a basic algo that you can reproduce. I believe the settings for this are in the tutorials, but even so, you can pause the video and look at the screenshots here to replicate this if you want to.